The section 7 of this reading covers the general requirements for financial statements. Most of this we have already covered in the previous sections. Now this all is coming together. So the required financial statements are obviously balance sheet, also called the statement of financial position, statement of comprehensive income or the income statement. Then we have a statement of changes in equity. Then we have a statement of cash flows. Then we have notes that summarize accounting policies and disclosing other items. And then in some cases we have a statement of financial position or balance sheet from the earliest comparative period. The features that we have talked about: fair representation, going concern, accrual basis, materiality and aggregation. This is something new that we haven't talked about before. No offsetting. That means all the amounts there are gross amounts. For example, company A has borrowed something from company B and similarly has also lent something to company B. You cannot just offset both of them. Both of these are supposed to be represented both in assets and liabilities. Then you have a frequency of reporting, usually quarterly, semi-annual or annual. Then the information presented should be comparative. That means year 1, year 2, year 3. Consistency of presentation, the numbers are calculated on similar rules and standards. Then the structure and content. The minimum, the balance sheet should be classified, means current assets, current liabilities, long-term assets, long-term liabilities, and so on. Then we have minimum specified information on the face. For example, at least property, plant and equipment should be at least one line item. Minimum specified no disclosures, at least they're referenced, they disclose accounting policies, and they should be presenting comparative information. Moving on, just to summarize, the financial statements framework, minimum requirements, disclosure of accounting policies should be there, measurement basis used in, this includes measurement basis used in preparing financial statements, significant accounting policies, and judgments made in applying accounting policies that have the most significant effect on the amounts recognized in the financial statements. Then sources of estimation of uncertainty. Here the management must share the key assumptions about future and other key sources of estimations that estimation uncertainty that have significant risk of causing material adjustment to the carrying amount of assets and liabilities within the next year. Other disclosures. This is about the information about capital and about certain financial instruments classified as equity, dividends not recognized as distribution during the period, including dividends declared before the financial statements were issued, and any cumulative preference dividends. Description of the entity and including its domicile, legal form, country of incorporation, registered. Usually this is the first of the notes that are there. Nature of operations of its and name of the company and the parent. So this brings us to the end of section 7. In the next class we are going to cover the sections 8 and 9, which will conclude this reading. As of now, that's about it for today. And as an assignment, this is important. You should come up with a brief note on the accounting standard setting body in Pakistan and the regulator that we have in Pakistan. What are the objectives? What roles do they play? How do they draw the legal power? And a brief introduction on them. You're supposed to bring this assignment in the next class and submit. Thank you.